the cover slide pretty much sums up my feelings about the market these days. A whole lot of pretty and a whole lot of crazy. Arguably probably more crazy than pretty lately. It's nuts out there. This is not a market that lends itself to any kind of simple definition or charting or anything like that. And I'm kind of summing up my entire talk with this one slide. You, the audience, are saying, so you're going to give us a rational explanation for everything going on in the market? My response is, you're shitting me, right? Basically, I mean, the markets really are about crazy, at least partially, but they're also about lack of trust. There's been a really significant change in the mindset of, large investors maybe, but as far as the gold market's concerned, the central bankers are probably the more important actors. This started, and I've talked about it in the past, this really started when the sanctions were put on Russia after the Ukraine invasion. And, believe me, I'm in favor of the sanctions. I wish somebody would put a bullet in Putin's head personally. But when they did that, and more to the point, when a bunch of the Russian central bank assets that happened to be in New York were seized, that really freaked out a lot of central bankers, not just the Russians. Central bankers have always had this belief that their reserve assets were sacrosanct and, they weren't going to be subject to any kind of tariffs or sanctions or anything like that. And it really spooked a lot of them when these sanctions were put in place. And part of what happened coming out of that was that drove a lot of central banks to start looking for non-US dollar denominated, and more importantly, non-US domiciled reserve assets. And of course, one of the most important and long-standing assets that fit that category is gold. So, the thing about gold, and to me, this is the most important attribute of gold that's underpinning this whole rally. Gold is really the only major asset class that has no counterparty risk. You own bullion, there is no other side of the trade. And that is huge, huge, huge for these central bankers. And it's become pretty huge for a lot of big institutional and even retail investors. They like the idea of owning something that, nobody else can screw with on the other side of the trade. And I think that, I think that's a central change and a basic change. And I also think it's, important to understand this. It's a secular change. I don't think it's cyclical. I think this change is probably here to stay. I think gold is back to being one of the majors and getting close to being the major central bank reserve asset. And I think that's how it's going to be for a long time going forward. I mean, even if the GOP caucus suddenly grew a pair and invoked Article 25, that's not going to be like flipping a switch. It's not going to change things overnight. The amount of, you can see from, what just happened in Davos, I mean, the amount of mistrust now between these different parties is so large that I just think it's not going away that fast. So that very, very large bid under the gold market is there to stay. It is a bit of a scary chart, no two ways about it, and silver is even scarier. You look at this 10-year chart, and that's, it's pretty parabolic. And whenever a chart gets like this, you can't discount the idea of a pullback, 5, 10, 15%. And I want to be clear, I'm thinking in terms of pullback, not top. I don't know where the top is, but at least in terms of time, I don't really think we're anywhere near it. Like I said, the changes that have been wrought in the market in the last few years are not going to turn around anytime soon. What the top is ultimately, honestly, I have no idea. But I don't see this market having much less than at least another year or two, and it could be more. It could be, I think gold going back to pick a number, $1,000 or something like that. I don't know that that's going to happen. I think those days are over. I think there's enough of a central bank and large institutional bid under it that, we may get pullbacks, but we're not going to see it go back to the price regime we saw 5 years ago or 10 years ago. I think that's done. Silver is really scary looking. It added another $4 today. It's got some of its own demand drivers, but to my mind, it's basically following the gold price around. A lot of people thought $100 was going to be a big wall. I wrote this slide last night. It was not a big wall, as it turned out. It chewed right through it today, no problem. Didn't even really pause. And again, this is another one where I have no idea how far this could go. I think, when you're trading in a move like this, it behooves you to be sensible and take some money off the table now and then. But I'm not, I don't want you to think I've become negative about this market, because I'm not at all. Here's a venture index. It's not a great corollary for the resource sector, but it's kind of the best one we have. But you can see what's happened there. I mean, things topped out for a while early in the fall, and it kind of went sideways down a couple of months, and then it really kind of took off again in November. And it's taken off even more strongly since the start of the year. I don't know, I don't know how far this goes, but my gut feel is it's probably got quite a ways. The resource sector is a tough sector. We all know that. Through most cycles, it has a habit of being sideways, being flat, not really going anywhere. And as a resource stock investor, you tend to get trained to take profits regularly, and in some cases probably early. I'm going to, don't get me wrong. I think it's a good idea to protect your money, get your basic money off the table. But we also have to recognize that one of the big attractions of this sector is it does have these periods, and they tend to be secular. They tend to, they last for 1 or 2 or 3 years maybe. They don't come along that often. But if you're lucky enough to be in that type of stage in a resource sector, that's when life-changing money gets made. So while I think everybody should be sensible, I think you should also recognize that this is a market where you literally can make life-changing money. So, if ever you're going to swing for the fences, this is the market you swing for the fences in. So, don't be afraid to be a little brave on this stuff. But obviously, you got to watch the market like a hawk, because when it turns, it could turn hard. But I don't think if there's a pullback in the near future, I think it's a pullback, not a top. I don't think the top's that soon yet, unless something really whacked happens. Copper's, $6 now. I mean, it's also had a heck of a move. You can see in this 3-year chart, you can see that giant step down, the little tariff tantrum thing. It's regained all that, and this is pretty much basic supply and demand. The U.S. is talking about, speeding up permitting with the warp speed program, and there's some indications that they are in fact doing that. Other countries are also talking about it. We'll see whether the talk actually turns into action. But the simple truth is, it's very time consuming. It takes a very long time to permit a mine. There's just no getting around it. The simple truth is, copper, or for that matter, any other metal, if you're looking at even 3 or 4% demand growth, which doesn't sound like much in most rational markets, but in the mining market, generating that kind of supply growth is really, really, really fucking hard. It's really hard to do. So the simple truth of the matter is, failing something that somehow makes everything happen a lot faster, and I'm skeptical we're going to see that. This is a supply-demand situation, and if you'd asked me 5 years ago whether copper is going to go to $10, I would have told you you're out of your mind. You asked me today, and yeah, it might. There's just no easy way to fill that supply gap. The only way to do it is to run the price high enough to take off some of the demand. So I don't think we're done with copper yet either. What kills this market? I don't know. I mean, there were some concerns just recently that we see a real run on yields, and obviously a big enough run on yields would be enough to do it. If you look at the chart on the left, that's a Japan 30-year yield. It's been climbing for like a year and a half, because they, unlike the last 30 or 40 years, Japan actually has a little bit of inflation now, and there are some increasing concerns about their horrendous fiscal balance. But you saw there was a real move there in the last couple of weeks and really jammed it higher. There was a lot of talk on Wall Street about, we're next for the Treasury market. But if you look at that Treasury curve, it really hasn't done much anything. Like, yeah, it's up a few basis points, in the last couple of months, but it's no big deal. There's no real sign we're going to see a real takeoff in yields, but it's a danger that can't be discounted. The simple truth is the U.S. borrows $4 trillion a year, and as much as they're doing a lot of saber rattling and talking about how they get to set the terms, the truth of the matter is, when you're borrowing $4 trillion a year, you don't get to set the terms. If the bond market suddenly decides they need 10% yields, well, that's just how it's going to be. I have a lot of trouble envisioning that happening anytime soon. There are sellers in the U.S. Treasury market, because of Greenland and a few other things. But the simple truth is, it's the largest, most liquid market in the world, and I don't see most of the participants exiting it anytime soon. So you'd have to see a couple of big central banks blowing everything off to really push your yields up to 3 or 4%. So I'm skeptical it's going to happen, but it's not a risk you can totally discount. The other thing that might kill it is Trump doing something really stupid. And honestly, I don't even know what really stupid means anymore. I mean, given what the guy does from day to day, I can't even imagine what that would be. But because it's something I can't imagine, if he does it, then maybe that's what kills the whole rally. So far, I'm honestly shocked at how blasé Wall Street's been about Trump. I mean, he's done some crazy shit, and you see the S&P drop 100, 200 basis points, which is like nothing really in terms of where it's trading right now. And then you get the so-called taco trade, which is, taco stands for Trump always chickens out, which is basically just a variation on buy the dip. And that's worked out really well 3 or 4 times already this year. So I don't know, Wall Street just doesn't seem that worried. So I don't know what kills us, honestly. Basically to sum everything up and to keep it as simple as possible, this is the best metal markets any of us are ever going to see. It's not going to, in terms of the overall market, it's not going to get better than this. This is as good a market as you're going to get if you trade these stocks. So be sure to take advantage of it. It's hard to buy stuff when prices have run, because you never know where the top is. But in my experience, and I've only seen a couple of markets like this one, when you get these kind of moves in metal prices and this kind of money flow into the sector, prices can move a long way. Even stuff that's gone up 200 or 300%, it's very conceivable it goes up another 200 or 300 or 400%. That's the kind of moves you get in this sort of a market. And I'm not saying sell the house and the kids and buy resource stocks or put money you can't afford into it. But this is the kind of market where it behooves you to try to be a little bit brave. Take money off the table, try to make sure you have your initial investment out, either spend it on something else or look for new opportunities. But if you can knuckle down and let things ride a little bit, this is the kind of market you let that do. You let that happen. And obviously, if you're doing that, you're going to have to watch outside events. At some point, something will happen to put the kibosh on this. And like I said, I don't know what it's going to be. But markets don't move instantly. So if you're paying attention and you see something happen, and suddenly you can see you see the air go out of the market, that's the time to not be brave anymore and get the hell out. Basically my last paragraph sums up the whole thing. Resource stocks are unforgiving, but many of us, especially me, I'm attracted by I love exploration. I love discovery. I love investing in companies that actually find new things that weren't there before. And when you're in this kind of period, it literally can give you life-changing gains. This is one of those periods. So everybody cross your fingers and hope that this lasts for another year or two, and we'll all be driving here in Bentleys next year. Thanks very much.